Well, our next guest looks after the books at one of Britain's biggest supermarkets. John Rogers is Chief Financial Officer at Sainsbury. Well, the retailer boasted record trading over the Christmas period. Sales climbed more than 3.5% in the third quarter, outstripping even its largest rival. Well, John Rogers joins us now from London. Thank you so much for joining us here on Bloomberg. How concerned are you, Mr. Rogers, about these increases in the price of the raw materials, and what can you do to protect your margins?
Well, I think we're concerned on behalf of the consumer. Obviously, rising input prices generally translates into rising retail prices. So we're doing our best to try and absorb those prices and make sure we minimise the amount that we have to pass on to the consumer. I mean, I think we saw retail food price inflation of about 1.5% to 2% in the last quarter. I think we'd expect to see that tick up a little bit in this coming quarter, given the VAT increase in particular. So it's probably going to be of the order of 2 to 2.5%. But actually, in practice, that's a number that's a lot lower than some of the headline figures that are often talked about, because consumers are actually able to dial out inflation from their basket by switching out of expensive products into cheaper products. For example, private label, which generally speaking is about 20% lower than branded products.
John Rogers, what about diversifying? Are you, for example, trying to strike deals with countries where inflation is less so, or are you trying to have any special agreements to keep these food prices down for the consumer?
Well, we work very closely with our suppliers, who by and large try and hedge out some of these price increases going forward in the market. And indeed, we ourselves, we obviously buy a lot of wheat for our own bread making purposes, and indeed we try and hedge forward some of the risk attached to those rising prices. So we do our best to make sure that we mitigate those increases and make sure that we try and avoid passing those on to the consumer.
How much is the consumer actually now focused on cheaper products in terms of your different ranges? Do you see a shift now that we're in a recovery phase that actually people want to go for the slightly more upmarket food item?
We're not seeing any noticeable changes, actually, between people who buy our value lines to people who buy our Taste the Different line. In fact, it's quite common for consumers to purchase both items in the same basket. I think what we are seeing, and what we have seen actually over the last year and a half or so, is a much more savvy consumer. So consumers are looking for that value in their basket, but equally they're not frightened to spoil themselves from time to time and buy our Taste the Difference range also.
And in this current economic environment, how much are you looking to expand abroad, possibly in markets that are growing more than the ones you're already in?
Well, actually, we're really confident that we've got a good 5 to 10 years of organic growth in the UK market, and we're adding about 1.5 million square feet of retail space per annum to achieve that. So we don't feel the need to have to diversify growth into other markets at this point in time. All of that said, actually, we have got a small team of people looking at the market in China. I think it would probably be a dereliction of shareholder duty if we weren't looking at a market that's growing so rapidly. But that's certainly something much more for the longer term, and not something we see ourselves doing in the next 2 to 3 years.
But in China, this would be organic growth, or actually going through acquisitions?
Well, I don't think we've even got to the point of making that decision yet. We haven't got to the point of making the decision to enter the market. As I said, it's a small team of people out there doing some preliminary work, understanding how the market operates. We need to get to the point of deciding whether this is the right direction for the business to go in, and obviously then, at that point, what is the right means of entering that market.
And John Rogers, what is your biggest concern for this year?
Well, I'm not overly concerned for this year, if I'm honest with you. I think we are cautious but confident in the outlook for the next year. There's no question that it's going to be and continue to be a tough consumer environment. But actually, I think we've demonstrated over the last 1.5 years that we're able to perform very well in that tough environment. And even though we've seen sales come off in January, that's to be expected. That's part of consumers tightening their belts post the Christmas splurge. And actually, we continue to outperform the market. So even though the absolute growth in the market has dropped off slightly, Sainsbury's as a business continues to outperform.
All right, John Rogers, the Chief Financial Officer of Sainsbury there. Thank you so much.